Hey guys, here to Reflex here. Welcome to the 21st episode of the weekly market outlook with TRADEXPROP. In this episode, I will be covering the dollar index, gold, and the S&P 500. Wow, so this is my second time recording the outlook because it actually didn't record my audio for the after the first pair, which is the DXY, it stopped picking up my audio. So that was a 36-minute video of me saying nothing at the end. So I think in this part I'll just kind of like pick up the pace and I'll just go straight into the outlook. But apologies for the absence of weekly outlooks for the past 2 weeks. I haven't been at my work desk because I was on vacation. So but don't worry, I'm back with the outlooks and I hope I can give you a lot better outlooks after that period of rest. To be fair, in those 2 weeks that I was off and away, I actually did give it some thought on how I could revamp the outlooks, and I actually decided to change things up a bit. I am now going to focus a lot more on just pure price action, and that would be in hopes that regardless of what school of concept that you fall under, you could utilize my concepts a lot more, because I would just be reading the candlesticks in itself per se. I'd be focusing a lot more on price action, right? Instead of using fair value gaps or supply and demand that not everyone uses, I would just be using pure levels as well as candlestick confirmations around those levels for my outlooks. Alright, so I don't want to waste too much time. Let's get straight into the outlook. So here we have the monthly on the DXY, and I like to do two things whenever I open up a chart. Regardless of time frames, I want to see where I currently am as well as what we did before the current price that we are at. So currently we are at this level on the monthly. We have 2 weeks before this candle closes, so this is still an open candlestick, and at the moment we are at this level of support around the 101.3 price mark. And last month we actually closed with a really big convincing bearish body candle with a body to wick ratio right here, but we did close rejecting the support at 101. So in this current monthly candle, we are going to see either one of two things. The first one is we are going to continue to push up after rejecting this level right here, or we're going to see a failure of this level by closing beneath it, in which you could be looking for a sell. So depending on how we close in the month, it is likely to show us if we're going to return back into the range to continue higher, or if we are going to close beneath this range, this level right here, and violate it to push lower. Okay, so the first scenario, let's say we close and respect it, I would want to see price respecting this previous month's low around 100.51, and I want to see price violate this high right here by closing above it and trading above it, so we could see price continue higher into the top of this range right here at 106.6 is our next area of resistance. Okay, so that's currently where we are. But if on the off chance that we do see price close beneath it, I want to see first off how convincingly we can be close beneath. Okay, because if we close beneath barely like this, it's not much of a confirmation. But if we do close, if we do close like this, then we aren't too far away from the zone right here, because if we close like this, then I want to see how much range we have for price to continue lower, because at the moment we have a 2000 tick range, but just remember that we're not going to be able to capitalize off of the whole 2000 ticks. Okay, so if we close beneath it, ideally you should take shorts down into this 900 price point right here, this resistance, broke, support. So we could see shorts down into this area of support right here and then push higher. But on the off chance that we do break beneath the 99 price point, we could see price travel all the way down into the next area of structure, which is around 95.59. okay, yeah, in and around this area right here. So 96, 99, this large area right here. Okay, so that is it on the monthly. Let's go on to the weekly time frame right here. So move that. So here we have the weekly, same thing. Let's repeat the process. Where are we currently at? We're currently here. And what did we do before it? So we came all the way down in this large momentum push with 4 bearish candles, and we're currently within a range, right? We came down from support around the 100.67 price range, and then we came up and formed resistance around the 101.73 price range. And last week we actually came up to retest this level, and then we shot all the way back down, showing that rejection. And last week, in terms of the candlestick, we closed with a small body to wick ratio right here. So when you see price rejecting an area of resistance, and then you see price closing with a small body in a bearish standpoint, it means that we are likely to continue going lower because we don't have any signs of reversing higher, right? So we did not break above the previous week's high at all, and we are now stuck in between this range. So ideally, based off just this formation right here, I would favor price to continue threading lower down into this area of support right here for around 45 points. It's not really that ideal. So the better gameplay for me would be for price to either break above 101 to continue to see longs up into potentially 103, or for price to break and close beneath 100.67 to see price continue down into around, this 99 price point right here. Okay, because this is a clean range, and why I say that is because clean ranges means that in this area we have no area of resistance, and right here we just have this large clean traffic to the downside on the right here. There's no area of obvious support other than this area which price rebounded off of. So you could in theory take shorts down into this level and take longs from this level. So off the weekly in itself, we don't really have much price action within this 1000 or maybe this 100 point range, but what we can do is we could zoom in deeper into the daily to see if there's any structure. And sure enough, here on the daily time frame, we do have some structure points. So currently we're here. Before this, we were just ranging, so not much price action can be seen, and we have this area of resistance up top, 101.77, as well as this area of support at 100.5. We have a minor support right here at 101.05, and last week on Friday we interacted with this level, rejecting it and then closing with no wick to the top. Okay, so as of now, the probability that we continue higher from here based on this candlestick is quite low, because we don't have any range to the upside right here, right? We don't have that. We just have a straight open, came all the way down, and then we rejected higher. So based off just this formation alone, I don't really have a high probability that we're going to go higher, but we definitely could go higher. If we break this high right here while respecting this low, we could see price continue higher within this range all the way down up into 101.773. But the better play, in my opinion, would be to wait for price to break above 101.773 to continue to take longs all the way into 103.04, right? So around this price point right here, that would be the cleaner buy in this scenario. But if we do close bullish while respecting this low, short-term longs into this area is indeed possible, although it is not a very big range. So that's what I'm looking for at buys. But what about shorts? So if we do close beneath this level, breaking this low or even this current low that we are in, you could see shorts down to fill this wick right here, which is around 50 points, and then down into this area of previous support right here. So this is also not a very big range. The ideal range would be if we break and close beneath 100.55. We could see shorts down into this area of previous support right here. If I just zoom out a bit, you could see that we do have clean traffic all the way down into this price range right here. So that's pretty much what I'm looking for the DXY. Remember, this monthly candle closure is really important, and we have 2 more weeks for it to close, and then we'll see what happens then in terms of a longer picture. But next week, actually, we do have a very important news release coming up, which is the federal funds rate. For those that don't know, the Fed funds rate is a direct impact on the forex market, as well as a lot of different other markets, because it directly correlates with the interest rates that affects the currencies. Okay, so looking at the calendar right here, which is based off of local Malaysian time, GMT +8, so do convert to your own local time zone. But here we can see that the FOMC news release comes out on Thursday. We have core retail sales on Tuesday and no news on Monday, Wednesday, and Friday. So ideally for me, I would like my trading week to kind of go up until Wednesday, because I don't want to risk my account going into the Fed funds rate position. So likely I will be holding intraday plays all the way from Monday to Wednesday. I might hold some small runners all the way into FOMC, but depending on how the positions play out, I would probably look to close them out before the news release. And after Friday, we could see the rangy price action as the markets digest this right here. So overall, next week it could be one of two things. We know that on Thursday there's going to be a large injection of volume into the markets. We know that it is going to be a wild day or a wild session, but I'm hoping that at least Monday to Wednesday we are going to be seeing some tradable price action, because price could also just range before FOMC and then boom, and then range on Friday. So it's going to be a tough week if the worst case scenario happens. Okay, but regardless, always pick your battles. Don't pick battles that you don't have a high chance of reading correctly. And there's nothing wrong with staying out of such a crazy week, to be fair with you. Seeing as FOMC is not exactly a friendly news release to trade. Okay, so I won't go into the details of if I think FOMC will be negative or positive. You could look at the Fed Watch for more details, or you could just read more articles online, because to be frank, we won't really know what data that it's gonna be released. You could have your own forecast, for sure you could, but as a technical analyst and as someone that's giving you an outlook, I try to keep my biases as neutral as possible, and I try to go under the pretext that the price chart that we're trading on kind of it has digested all of the news release that's going to be appearing next week anyway. So search up the efficient market hypothesis by Eugene and Fama if you don't know what that means. But basically, I'm just hoping that the price chart kind of covers everything that we need already. So that is it for the DXY. Let's move on to my favorite pair, gold. Okay, so to be fair, for gold, we have seen, okay, I just want to make sure that the audio is still recording because it cut off around this point right here. But for gold, we are seeing on the monthly this large push higher. We're currently here, and what we did before that, we did see a large momentum push higher. And this is since February, so for the entire past 7 months, we've seen just strong bullish pressure and then making all-time highs, right? And the one thing you don't want to do is you don't want to be calling tops, because people here were like, oh, you know, like we're gonna see retracement, we're gonna see retracement, we're gonna see retracement, and it never actually retraced. Okay, so don't be calling tops, but always understand that the retracement is likely to be just around the corner. We don't know when, but we don't want to be the one that's calling it. Okay, so as of now on the monthly on gold, there's not much structure to be seen apart from this nearby level around the 2370 price range. We had this area of resistance. Price cleared that area on this candlestick right here, and price came down to retest it. So this is a pretty much a key area of support right here that I'm looking at on the monthly. So we could see price, you know, if we do form a resistance, we could see price come down here and then continue pushing out from here if we were to retrace in the first place. Okay, so that's what I'm seeing on monthly. Let's look at the weekly right here. Let me just clear that. So weekly, let's see if we have any clear indication on where we want to go. So we are currently here. Last week closed in a big convincing bullish candlestick, making new all-time highs again. We also did close the same way on gold futures on COMEX right here. So moving back down to gold CFD chart on Wenda, we all agree that we are strong bullish in this candle, and before this we are actually caught in a range before expansion, and then this retracement, and then we expanded again. So as of now, to be completely fair with you, I am still favoring longs to retest all-time highs, but before that I'm also completely okay with price making a area of resistance, and then once we break this low we could see price retrace lower. So I'm going to be eyeing this short-term scalp counter trend trade. Okay, so that could happen. On the off chance that we retrace down and then we respect this level, I can now take longs back into all-time highs, which is around 2586. So I want to see this happen for me to take that. But if we come down here and then we don't respect it, we instead violate it right here, I will see shorts down into this area, which would be my first target around 2431, this minor support right here. But ultimately I would like to see price travel all the way down into 2387, which is around it's around 1,000 points away from where we currently are if we break below 2497 right here. So the thing is that it's kind of a tough and difficult scenario because we were ranging before this, and whenever you see a range, you have to know that there's going to be structure built next to structure, right? Like what I mean is, you want to take shorts down here, sure, you want to take shorts, you want to be aware of where price is likely to reverse around you. So we have this support, we have this support, so we have nearby supports just crumple next to each other. So on a weekly basis, it isn't ideal, but when you measure this range on an intraday basis, this is like 680 points. This is a good range to trade from. So it's definitely doable for us to take shorts if we break below this level on the weekly and we close beneath. But on a more longer term basis, I want to see price react around these key areas right here. Okay, but as of now, if we do break and trade above all-time highs, I am still expecting the market to continue higher as long as we keep respecting these higher lows right here. Okay, so that is gold on the weekly. Let's look at the daily. Okay, currently we're here, same thing, strong bullish candle with a big body to wick ratio right here. We ranged beforehand before seeing this large push higher. So same thing, if we break above the current daily high, we could continue to see price trade higher on an intraday basis. But on the off chance that people start taking profits and then we see the market start to show resistance and then we're breaking this low right here, I wouldn't mind taking short-term scalps with this clean traffic down into supports around 2511 right here. And if we do break beneath that, we could see price travel down into, you know, around like 2484 would be an ideal place. But this one is really range, it's very difficult to trade. We have support here, and then finally this support here. But you could still take intraday trades down into this level around 2484, which is still pretty much around like 280 points. Not too bad, you know, just aim for your 20 to 40 points on gold, should be fine intraday wise. But for longer term trades, I would like to see price break beneath this level at 2484, where we can take shorts down to cover this week around 120 points away, and further down into 2447 for around 370 points. Okay, so break beneath here, good sell. Break beneath here, lackluster sells. Form resistance, come back down. You can take shorts down to this level, or some of these levels are potential areas of support. But this is that structure point that's more important. So take short-term scalps and then wait for support to form. Once we form support down over here, and then we start breaking this high, then you can take longs all the way up into all-time highs to retest that. Okay, very quick and simple, very quick and easy. Okay, also keep in mind the econ calendar also has FOMC, which will also still affect gold, right? Because the reason why you see gold having such a big push move higher on all time frame for the past year is because gold has always been a strong safe haven asset for people to invest in when times are tough, when globally we are in an economical distress period. The people would see gold as a no-brainer for you to just throw in money every single month and just DCA it, or just put it into their portfolio as a medium risk investment. It's still high risk. It is still high risk because it's not a bond. It has no fixed income, but comparatively to other asset classes, over time it is going to appreciate as the most widely known precious metal. So, you know, don't be calling tops. We are still in a strong bullish push move on all time frames. But once you start to see a resistance form, you could look for price to break above it to trade higher, or even break beneath it to trade lower, right? But don't be calling tops until we see confirmed body closures, especially if you are more so of a conservative trader. Okay, so that is it for gold. Let's go on to the S&P 500. Okay, so here on the S&P 500, currently we are here nearing all-time highs, which is around this price point right here. This month is still open, and currently what we're seeing is we are nearing the opening price right here after a strong rejection to the downside, right? We had this area of resistance, price cleared it, we use this as support, and now we are rejecting this area of support right here to potentially continue higher, right? But that's all that we're seeing on the monthly chart because it hasn't closed yet, so we don't know if it's going to continue higher or lower, right? This big wick was from the Japanese yen carry trade, I assume so, and we're seeing a rejection higher of that area. So this is a really interesting candlestick because this is the monthly, right? And only month we have 4 weeks. Next week is going to be the second half of the lifespan of this candlestick. And then if you know anything about candlesticks, is that a normal candlestick has a high and a low, an open, high, low, close, right? I mean, in a bullish sense, it has an open, low, high, and then close. So normally the true expansion direction of a candlestick happens on the second half of its lifespan. So be it a 30-minute candle, a 1-hour candle, the true move is likely going to be happening on the second half of its lifespan, because for a candlestick to have that lower wick, it has to go beneath the open and then go up. So this move normally happens within or before the second half starts. So within the first half, this move is likely to happen. So this might be the time where we're going to breach all-time highs, continue higher, just based off of the normal behavior of candlesticks. Okay, so with that in mind, we don't have anything confirmed yet, but I am expecting a reach higher into all-time highs at 5680 of the Orenda data feed, right? So let's go on to the weekly to see if we have any confirmations right there. So at the moment we are here. The previous week closed in a strong bullish candle, and before that we are kind of in a range, right? So we came up, came down, and now we're in this range right here. We have a resistance up top, just clear that. We have this resistance up top, and we have this support form down below. We actually closed above this body, this series of bodies right here, and then we immediately closed back within this range, meaning that this is potentially a fake out. Okay, so as of now, to be fair, I don't have a lot of information based off of the weekly, because we just came down, came up with two really big convincing candlesticks right here. But based off the weekly, if we do close above, we could see price retest all-time highs and incrementate higher. But if we do close beneath this level, then we could see price travel all the way back down into 5300 right here, which is around a 87 point range. Oh, sorry, 800. Sorry, this is like around a 800 point range right here. A break beneath this would be a bit more ideal for shorts. A break below 5306, we could see price retest this wick and fill it, which is around 200 points. Okay, so ideal shorts beneath here, ideal longs beneath here. Right here it's a bit more messy. We need to go down to the daily and maybe even the intraday time frames like the H4 and below to have a clearer look on things, right? So yeah, not much information as well off of the daily, but we now have a bit more information that we did make a V-shaped move where we are currently at. So price went up, formed resistance, price came down from support. Now we have this clean traffic to the left hand, to the right hand side right here. So this area around 5652 to 5674 is an area of resistance. So depending on how we interact right here, if we reject this area, I reject it like maybe like this. Let me draw it right here. If we reject this area and then we form resistance and then we break this low, we could see price correct this entire move right here down into around 5393 or maybe around this cluster of wicks right here. Okay, but ultimately important structure is 5393. But if we close above it, we are likely to target all-time highs. And if we close right through all-time highs with just one swift push, as long as we respect the lows of this candlestick and we keep breaking higher, you could in theory see price thread higher and higher. Okay, so in this range, sells around here, but buys also around here, depending on if we respect it or not. So ideally, shorts would be beneath. Well, I mean, you could take a short down here, right? If we close beneath 5393, we could see price come all the way down into this area of structure around 5317, but ultimately around 5181 is where I would take the bulk of my shorts off if I were to take them based off the closure of this level right here. This is a level of structure because we have resistance, price cleared it, came back at support, we tapped it right here, and then we went higher. But even if you wanted to say that, you could just remove this, and then this would be your closest level, or you could manually enter once price forms a support, to do whatever, or we could see price close beneath it, come back for a retest, and then you could take your shorts down into your new level of potential support. That's also something you could do, right? It's all about adapting to the markets and reacting to fresh information. So it was a pain, needing to re-record twice. It definitely was a pain. It took like an hour in total because this one is running at around 31 minutes. But I basically thought of this change right here because I wanted more people to benefit from my outlooks instead of just using fair value gaps, because not everyone uses liquidity, not everyone uses fair value gaps, not everyone uses order blocks or supply demand or Elliott wave or Fibonacci's or whatever. So I wanted to kind of focus just purely off of the information I could get on candlesticks, and also kind of use just basic areas of support and resistance to formulate trade ideas off of those areas. Because why is this a support? Simple, because price came down, we found support at it, and then we closed, came back up. Why is this a support? Price came down, bounced off of it, we reacted off of something right here, support, right? So it's just really basic theories, and it's not exactly those areas in themselves, but it is waiting for price to react to those areas and getting your confirmations there. Okay, so in the future we are going to have more events on our free Discord. I'll probably be doing a few like live chats, live calls, things like that, all for free for our members. So it's not confirmed yet, but that could happen, right? And if that does happen, I want you guys to go there and chat with me. Okay, not promised yet, but I'm looking to make it happen. But until then, stay safe, guard your account, and protect your capital next week. Peace.